GLAIZA JALANDO-ON. So today I'll present an overview of the financial statement and balance sheets of the Bank of the Philippine Islands, which is the BPI, for the year ended December 31, 2023. So the Bank of the Philippine Islands, commonly referred to as BPI, is one of the leading financial institutions in the Philippines, with a rich history dating back in the 1851. BPI provides a wide range of financial services, including corporate banking, consumer banking, investment banking, and insurance operations. So for this presentation, I will summarize key highlights from BPI's financial statements, including the statement of position, which is the balance sheet. So I will be comparing the previous year also. So statement of financial position, balance sheet, is this statement shows the company's financial health at a specific point in time. It also lists the company's asset, liabilities, and equity. So assets are what the company owns, liabilities are what the company owes. Also, the equity is the residual claim on the company's asset from after deducting liabilities. So as of December 31, 2023, BPI's total assets amount to 2,888,372,000,000 pesos, showing a growth of 10.9% from 2,603,961,000,000 pesos. It's just in 2022, the major contributors to this increase are loans and advances and total assets. Also, the key components of the asset includes the cash and other cash items. It is 34,843,000,000 pesos, and also the loans and advances net 1,882,000,000 pesos. And next is the investment securities. So the investment securities is 601,400,000,000 pesos, 18,700,000,000 pesos at fair value, and 382,700,000,000 pesos at amortized cost. So on the liability side, total liabilities increased to 2,529,000,000,000 pesos. So it mainly due to the rise of deposit liabilities, which account for 2,295,000,000,000 pesos. So this reflects BPI's robust deposit-taking activities. It also highlighted the trust customers have in the bank. So the equity portion stands at 359,400,000,000 pesos. It is a significant rise from 319,800,000,000 pesos in 2022. So it was driven by an increase in retained earnings and other comprehensive income. So the key highlights strong loan growth is total loans and advances grew by 10.5%. It was driven by retail loans such as credit cards and real estate mortgages. So it was improved asset quality. The bank's impairment provisions decreased to 4 billion from 9.17 billion in 2022. It was signaling better credit risk management. So capital strength, BPI's capital is adequacy. Ratio remains above regulatory requirements, ensuring stability and resilience. BPI's financial performance in 2023 reflects a strong market position, effective risk management, and ability to adapt to evolving economic conditions. So the bank has shown robust growth in both its balance sheet and profitability. It's positioning itself well for continued success. That's all.
RAMIREZ, and now I'm going to report about the income statement of BPI. The income statement of BPI, or Bank of the Philippine Islands, is the crucial tool for understanding the bank's profitability and operational performance. It reveals how well the bank is generating income from its core operation. In the Philippines, the BPI has been one of the leading banks, benefiting from a strong customer base and a well-diversified range of financial services. The net interest of income shown in the income statement, reflects the bank's ability to generate earnings from loans and investments, which is the key indicator of its profitability, the country's growing economy. Combined with BPI extensive retail banking services, corporate banking, and digital banking platforms, supports a steady flow of interest income. Additionally, BPI non-interest income such as fees from services like ATM, withdrawals, remittance, and digital transactions contributes significantly to the bank's revenue, further enhancing its overall profitability. BPI's operating expenses are also a critical factor in its operational performance. The bank has made significant investments in technology and infrastructure, improving its efficiency and reducing costs. By leveraging digital banking, BPI has streamlined processes, making banking more convenient for customers and lowering operational expenses. However, like any financial institution, the provision of credit losses is important. In a growing economy like the Philippines, the bank must carefully manage its loan portfolio to minimize defaults and ensure that it maintains healthy profitability. Overall, BPI's ability to balance its income and expenses is a key indicator of its operational strength and profitability in a competitive Philippine banking sector. The comprehensive income statement provides a broader view of BPI financial health by including other comprehensive income, such as unrealized gains or losses of investments and foreign currency adjustment. These items reflect factors that may not immediately affect daily operation but could influence future financial performance. For example, BPI exposure to foreign markets may cause fluctuation in value of foreign currency-denominated assets, while changes in the market value of securities could impact the bank's overall financial position. These factors can provide insights into the bank's long-term stability and risk management capabilities. Together, the income and the comprehensive income statements offer a comprehensive view of BPI's ability to generate profit, manage expenses, and mitigate financial risks. Despite challenges in markets, BPI's solid financial position, strong customer base, and strategic investments in technology and digital services position it as a leader in the Philippine banking industry.
Hi, I'm JERVIN DACAYANA. Today, I will discuss the Statement of Change and Equity of the Bank of the Philippines Island, or the BPI. The Statement of Change and Equity of BPI for the last year, December 31, 2022 to 2023, are included in their audit financial statement. The Statement of Change and Equity for Bank of the Philippines Island, or the BPI, provides a detailed breakdown of how its equity has changed over the specific period. It starts with the beginning equity balance, which is then adjusted for net income, other comprehensive income, and transaction with owners. Net income, the profit or loss from the bank's operation, directly impacts equity. Other comprehensive income includes gains or losses that are not recognized in income statement but still affect equity, such as unrealized investment gains of foreign currency translation adjustment. Transaction with owners involves activities like issuing new shares, repurchasing shares, and paying dividends. Issuing new shares increase equity, while repurchasing shares and paying dividends decrease it. The final figure is the ending of the equity balance, reflecting cumulative impact of all these factors. This statement is crucial for understanding BPI's financial health, investment potential, and risk profile. How did the BPI find their statement of change in equity? BPI get the equity ending balance for the previous period and insert it as the beginning of balance for the period being reported. And second, BPI get the net income or loss from the income statement. Then, the BPI find the value of withdrawal if one was made. Statement of change in equity. This statement shows the change in the company's equity over a specific period. It includes changes from income, dividends, and other equity transactions. A statement of change in equity is a financial statement that details how company equity changed over a specific period of time. It shows how different factors such as dividend, net income, and other adjustments impact a company equity. The statement of change in equity provides information of the following components of owner's equity. One of these is the share capital, the value of the share issued to the shareholder. So, every shareholders need a capital to give in this company to be their share capital for what they call the shareholders. Retained earnings, the amount of money kept in the balance since inception. Other financial statements includes BPI, audited financial statement includes BPI financial position, statements of comprehensive income, and statement of cash flows. Thank you.
Hi, I'm Kimbert Cabizares and I'm going to report the statement of cash flows for the BPI company in 2023. So, the cash flow analysis for BPI. Cash flows from operating activities. This section shows how much cash the bank generated or used in primary operations. Profit before income tax. This is the bank's net income before deducting taxes. Adjustment for impairment losses. These are the losses incurred due to the decline in value of assets. The depreciation and amortization, non-cash expenses related to the wear and tear of assets and intangible assets. Share in net income of associates, the bank portion of the profits of the companies it has investments in. Then dividend and other income from the investment and other sources. Share-based compensation, the cost of employee stock option and other share-based compensation. So profit from the assets sold, cash received from the sale of assets. Realized gain on investment securities, profit from selling investment securities. Interest income, income earned from the loans and the other interest-bearing assets. The income expense, interest paid on deposits and borrowings. The interest received, interest earned on investment and on other interest-bearing assets. Interest paid on deposits and borrowing. And the change in working capital, this includes the changes in account receivable, accounts payable, inventory, and other current assets and liabilities. So the income taxes paid, this shows how much the income taxes paid and the bank paid in income taxes. So the net cash from use in operating activities. This is the final figure indicating the net cash generated or used in operating activities. So in 2023, the bank generated a significant amount of cash from operating activities. This is primarily due to strong interest income and a decrease in interest expense. So in 2022, the bank used a significant amount of cash on operating activities. This was likely due to increased provisions for loan losses and other factors. And in 2021, the bank generated a significant amount of cash from operating activities. This was driven by strong interest income and a decrease in interest expense. So the statement includes the figures for both the consolidated bank and the parent company.
Hi, good day everyone. My name is Allan Tabada, and today I am going to explain the notes to financial statement of BPI, or Bank of the Philippine Island, or should I say parent bank. As of December 31, 2022 and 2023, each of for the 3 years in the period ended December 31, 2023, Bank of the Philippine Island, or the BPI, or should I say the parent bank, is a domestic commercial bank with an expanded banking license and was registered with the Securities and Exchange Commission, or the SEC, on January 4, 1943. The parent bank license was extended for another 50 years. On January 4, 1993, the parent bank's office address, which also serves as its principal place of business, is located at Ayala Triangle, Gardens Tower 2, Paseo de Rojas Corner, Makati Avenue. Same as Appel of Business is located at Ayala BPI and its subsidiaries, collectively referred as the BPI Group, offer a whole breadth of financial services that include corporate banking, consumer banking, investment banking, asset management, corporate finance, securities distribution, and insurance services. At December 31, 2023, the BPI Group has 18,982 employees. At 2022, it 17,573 employees and operates 1,187 branches and 1,530 automated teller machines, or should I say ATMs, and cash accept machines to support its delivery of services. The BPI Group also serves its customer through alternative electronic banking channels such as telephone, mobile, phone, and the internet. The parent bank, or the BPI, is considered a public company under Rule 3.1 of Implementing Rules and Regulations of the Securities Regulation Code, or the SRC, which among others defines as public company as any corporation with a class of equity securities listed on an exchange or with the assets at least 50 million and having 200 or more shareholders, each of which holds at least 100 shares of its equity securities. And also, on September 30, 2022, the boards of directors, or the BOD of BPI, approved the execution of an agreement between the parent bank and the Robinsons Bank Corporation, or the RBC, and Robinsons Retail Holdings Incorporation and GG Summit Capital Service Corporation as RBC shareholders for the merger of BPI and RBC, with BPI as the surviving entity as at December 31, 2023. All corporate and regulatory approvals have been obtained, and the parent bank and RBC merged effective on January 1, 2024. The merger between BPI and BPI Family Savings Bank Incorporation, a whole-owned subsidiary become effective on January 1, 2022 with the parent bank as the surviving entity Node 30.1. The comparative figures presented in the financial statement and notes to financial statements pertaining to the parent bank for the year ended December 31, 2021 are exclusively of BFB balances, approval, and authorization for insurance of financial statements. These financial statements have been approved and authorized for insurance by the BOD on February 21, 2024. That's it. Thank you. Bye.